Mortgage loans can be a great way to purchase a home but can also be expensive. Fortunately, there are several ways to pay off your mortgage early so you can save money on interest and shorten the time you spend paying off your loan. Hello everyone, welcome to Finance Wisdom. If you're new to this channel, do like and subscribe to the channel. This video will discuss Mortgage 101, how can you pay off mortgage early? So if you're like me and want to get rid of that monthly payment as fast as possible, then stay tuned because I have some tips for you. First, let's answer what is a mortgage. A mortgage is a loan that a lender gives you to help finance the purchase of a house. It's amortized over a set period, usually 30 years. Your home equity secures a mortgage, the value of your home minus any outstanding loans, and it typically has a much lower interest rate than credit cards or other unsecured debts. Why would you want to pay off your mortgage early? Paying off your mortgage early frees up money in your monthly budget and gives you peace of mind that your home is entirely yours. It also saves you money in the long run because you'll pay less in interest overall. If you're thinking about how can you pay off mortgage early, you should consider a few things first. Number 1, how can you afford to pay each month? Paying off your mortgage early will save you money on interest, but it will also require you to make larger monthly payments. Make sure you can afford the increased payments before paying your mortgage early. Number 2, do you have other debts? If you have other debts, such as credit card debt, it may make sense to focus on paying them off first. This is because the interest on your credit cards is likely to be higher than the interest on your mortgage. Number 3, what is your financial goal? Paying off your mortgage early may not be the best choice if your goal is to retire early or travel the world. This is because you'll need a large chunk of cash to do those things. Number 4, are you comfortable with risk? Paying off your mortgage early is a risky move. If you're not comfortable with risk, it may not be your right choice. Number 5, what are the tax implications? Paying off your mortgage early may have tax implications. Be sure to talk to a tax advisor to see if there are any implications for you. Number 6, what are the fees? There may be fees associated with paying off your mortgage early. Be sure to talk to your lender about any fees that may apply. Number 7, what is the interest rate on your mortgage? The interest rate on your mortgage will affect how much you save by paying it off early. A higher interest rate will mean you'll save more money by paying off your mortgage early. Number 8, what is your long term? Your long term is the amount of time you have to repay your mortgage. The shorter your long term, the more you'll save by paying it off early. Number 9, what is your current mortgage balance? The amount you owe on your mortgage will also influence how much you save by paying it off early. The more you owe, the more you'll save. Number 10, are you prepared for the unexpected? Paying off your mortgage early is a big decision. Be sure you're prepared for the unexpected before making the decision. Finally, what is your exit strategy? If you're considering selling your home or refinancing, be sure you have an exit strategy in place. This will help you avoid any early penalties or fees associated with paying off your mortgage. Once you understand these things, you can now start doing these ways on how can you pay off mortgage early. Firstly, understand your mortgage. Knowing the interest rate you are paying and the mortgage term is essential. It is also necessary to be aware of any penalties associated with the early repayment of your mortgage. Second, estimate your monthly mortgage payment and how much you can afford to pay extra each month. You can use a mortgage payment calculator. Estimate your monthly mortgage payment, enter the loan amount, interest rate, and term into the calculator to estimate your monthly payment. Make extra payments. One way to pay off your mortgage early is to make additional payments regularly. This can be done by increasing your monthly or making extra payments whenever possible. Thirdly, compare a 15-year mortgage to a 13-year mortgage. The two most common types of mortgages are the 15-year mortgage and the 30-year mortgage. There are pros and cons to both types of mortgages. 15-year mortgage. The most significant advantage of a 15-year mortgage is that you will pay less interest over the life of the loan. This is because the loan is paid off in half the time of a 30-year mortgage. A 15-year mortgage also has a lower interest rate than a 30-year mortgage. This is because the lender is taking on less risk with a shorter loan. The downside of a 15-year mortgage is that your monthly payments will be higher than with a 30-year mortgage. This is because you are paying off the loan in a shorter period. 30-year mortgage, the most significant advantage of a 30-year mortgage is that your monthly payments will be lower than with a 15-year mortgage. This is because you spread the payments over a more extended period. The downside of a 30-year mortgage is that you will pay more interest over the life of the loan. This is because the loan is paid off over a more extended period. Fourthly, calculate the interest saved by paying off your mortgage early. Assuming a $250,000 mortgage loan with an interest rate of 4.5% over a 30-year term, you would pay approximately $279,000 in interest if you made all of your payments on time. If you made extra monthly payments and paid off your mortgage in 15 years, you would pay approximately $140,000 in interest. These savings of $139,000 in interest by paying off your mortgages early. If you like this video, don't forget to like and subscribe to the channel. Fifthly, make a lump sum payment. Another way to pay off your mortgage early is to make a lump sum payment. This could be done by using a tax refund, inheritance, or any other type of windfall. Making a lump sum payment will reduce the overall interest you pay on your mortgage and the length of time it takes to pay off the mortgage. Sixthly, consider a bi-weekly payment plan. Instead of making one monthly payment, you can make 2 smaller payments each month with a bi-weekly payment plan. This will reduce the amount of interest you pay over the life of the loan and shorten the repayment period. Seventhly, refinance to a shorter term. If interest rates have dropped since you took out your mortgage, you may be able to refinance for a shorter time and lower your monthly payments. This will allow you to pay off your mortgage sooner. Eighthly, make extra payments on your principal. Whenever you make a mortgage, a portion of the payment goes towards the interest and the rest goes towards the principal. You can save money in interest by making extra payments on your principal. Ninthly, use a home equity line of credit or HELOC to make extra payments. Once you have built up equity in your home, you can take out a HELOC and use the funds to make additional payments on your mortgage. This will save you money in interest and help you pay off your mortgage sooner. Tenthly, sell your home and downsize. Another way to pay off your mortgage early is to sell your home and downsize. This will give you a lump sum of cash that can be used to pay off your mortgage. Then, pay off high-interest debt. If you have high-interest debt, such as credit card debt, it may make sense to pay that off before your mortgage. This is because the interest on your credit cards is likely to be higher than the interest on your mortgage. Next, talk to your lender. If you are having trouble making your monthly mortgage payments or are interested in any of the options above, be sure to talk to your lender. They may be able to help you find a solution that works best for you. Lastly, decide if paying off your mortgage early is your right choice. Paying off your mortgage early is a great way to save money on interest and become debt-free sooner. However, it's not the right choice for everyone. Before making any decisions, talk to your lender and financial advisor to see if paying off your mortgage early is the right choice for you. So, can you pay off your mortgage early? Yes, you can pay off your mortgage early. Doing so has several benefits, including saving money on interest and becoming debt-free sooner. However, it's not the right choice for everyone. Be sure to talk to your lender and financial advisor before making any decisions. I hope this video helped answer the question, can you pay off mortgage early? Please share this video with your friends and family if you found it helpful. Thank you for watching. I hope you have learned something from this video. If you like this video, do give us a like, subscribe to the channel, and comment below. Thank you and goodbye.